Greetings, my name is Christopher Bell, Certified Public Accountant. In this video, we're going to cover the accrual basis of accounting. We're going to keep this as simple as we possibly can. If you like me, if you like the way I teach, if you want to have a personalized one-on-one lesson, there will be a pinned comment below where you can sign up. So, we have two handsome individuals here. On the left, we have your accounting tutor, Chris. This is a photo of me from a couple years ago. I look pretty much the same. And then we have a eager accounting student over here. This is you. Now, Christopher Bell is a accounting tutor. He likes to teach accounting. He likes to do bookkeeping, file tax returns. He does a lot of tax and accounting related stuff. He believes that the accrual basis of accounting is the best way to record the revenues, expenses, profit, and loss of his business. That's what he uses on his books. The student, because he doesn't know what else to use, has decided that he's going to keep his own books on a notepad. He's still in college, and he's going to use the accrual basis of accounting too. So in this video, we're going to record transactions between Chris and this eager accounting student. This student has said, "Hey Chris, I'm going to pay you $75 for 1 hour of accounting tutoring." And Chris says, "Yes sir, let's do it." So, jumping right into it, what are the journal entries to record the transactions that are happening here? Well, the eager accounting student is so eager that he wants to pay Chris up front. "Chris, take my $75 right now." Right now being March 1st, 2023. So the eager accounting student is going to pay Christopher Bell up front $75. But the lesson isn't going to be until March 31st, 2023. A full month in advance. Now, Chris doesn't mind that because he likes getting money in advance. So he says, "Sure, I'll take it." Now, what does Chris record on his financial statements? Has Chris earned $75? On the cash basis of accounting, he does. He has. Because on the cash basis of accounting, when you touch the cash, you record revenues, and when you spend the cash, you record expenses. But think about the fundamental transaction. What happened underneath the surface? Did Chris earn that $75 when he got paid in advance on March 1st, 2023? No, he didn't. He hasn't tutored the eager accounting student yet. He hasn't earned anything. But Chris still has to record a transaction because he got $75 that was deposited into his bank account. So what does Chris do? Well, Chris says, "Okay, I'm going to debit cash for $75 because I am receiving cash." Cash is an asset, as we all know. But what is he going to credit? Remember, every journal entry has to have a debit, at least one debit, and at least one credit, and it has to balance. And if it doesn't balance, you're in trouble. So what is the offsetting credit? If Chris didn't earn the revenue, what is it? Well, technically, if you think about it, if the eager accounting student wanted to cancel before the lesson on March 31st, 2023, he could. He could say, "Hey, Chris, I don't like your shirt. It's too teal. Give me my money back on March 15th. And Chris would be like, "Okay, here's your money. I'm sorry," even though I already spent it. So, technically, to Chris, that money is actually called deferred revenue, which is a liability. That's right. Because technically, Chris would have to pay that money back if the student decided to cancel. So we're going to put a liability, a nice little L right here. Does that make sense? Chris has not earned the money. Therefore, he must record deferred revenue. Now let's move on to March 31st, 2023. So Chris and the eager accounting student meet on Google Meet, and they do a fantastic, the best lesson he has ever had, the eager accounting student, in his life. And he says, "Okay, Chris, you did a great job. I'm going to book with you again. I'm going to book with you 100 times. You're so perfect and amazing." What does Chris record on his books on March 31st, 2023? Has Chris earned the $75? Yes, he has. He has delivered. He has provided the service. The service is complete. So the first thing we have to do is say, okay, what are we debiting? Does Chris still owe or technically have a liability of $75? No, he doesn't, because he has provided the service. The student can't cancel because the service is already done. So Chris first removes the liability. We decrease a liability by debiting it. So we have a debit of deferred revenue because we're taking that liability off the balance sheet. of $75. Chris has earned the money, and he's going to credit what? He's going to credit revenue because now he has earned it. On the accrual basis of accounting, when you perform the work, which Chris did, Chris met with the student and he performed the work, he earns the revenue. So there you have it. We've reversed out the revenue. Now, deferred revenue and replaced it with revenue, which goes to the income statement. Now, a lot of people get confused because they'll say, oh, well, Chris did the lesson on March 31st, so shouldn't I be debiting cash? No, you've already debited cash. The student gave you the cash on March 1st, 2023. But that's not when you performed the service. Hopefully that makes sense. Now, because the student is such an eager accounting student, he's got his notepad, he's a young, rambunctious man. He wants to record journal entries in his notebook, and Chris is fine with that. So the eager student, on March 1st, 2023, does a journal entry as well. Chris received cash. The eager accounting student paid cash. How much did he pay? He paid $75. So right off the bat, we know we credit cash, which is an asset, for $75 because he's paying the cash. But has he incurred an expense yet? No, he has not. Why? Because he hasn't done the lesson yet. Chris has not provided the lesson to him. He could cancel with Chris at any time. So what does the student do? Well, he says, okay, I need to debit something. Oh, wait, I paid in advance the lesson. So we'll call it prepaid expense for $75. What is a prepaid expense? It's an asset. Why? Because the student technically has a claim to that $75. He could say, hey, Chris, like I said, I don't like your teal shirt. It's just repulsive to my eyes. I want my money back. And Chris would have to pay him back. So we have no expense. We have a prepaid expense here, which is an asset, goes on the balance sheet. And we have an asset, cash, going down. So it washes out to nothing. Nothing has fundamentally happened. However, now the lesson takes place. What does the student record? Well, now the student he's received the service. Chris has performed the tutoring session. The student has learned and mastered accounting in 1 hour. So now the student, the eager accounting student, has incurred an expense. So the student would debit expense, because we increase expenses with a debit. We'll call it tutoring expense, because why not, for $75. And what does he credit? Well, he already spent the cash, but what does he no longer have? He no longer has a prepaid expense. He's used it up. So we credit that. And that's how accrual accounting works. It does not matter when cash leaves the business or comes into the business. It's all about the fundamental work. Has the work been done? Has an expense been incurred? If it's yes, you record a revenue or expense. If it's no, you record usually a prepaid or some kind of deferred revenue, some kind of liability, something like that. Hopefully that makes sense. Hopefully you learned something. You can always leave a comment below and I will try to address it. Have a wonderful day.